Alrighty, everyone. So, trade recap as of it is currently 2 in the morning. It's Saturday for me. I am a day later than the people in the US. So it's probably 10 a.m. Yeah, around 10 a.m. Friday. For the people in the US and should be Canada, I'm pretty sure as well. Like a little before or later. But anyway, took a quick little short this morning. Took about 2 minutes. 2 minutes to hit TP, so not too bad. Before we get into the trade recap, here is the proof. As you can see, same setup. And we can see the trade rate. Boom, live account, sweet. You can get that out of here. So, let me just get rid of everything, and then we'll start from the weekly. Okay, so coming in, we can see that the weekly was overall bullish. To me, this was kind of like a bearish confluence in a way, because I mean, I'm pretty sure we are at all-time highs. You know, we sweep out all these lows. I mean, highs, but these highs didn't really, any of these highs over here didn't really matter for me, because we swept last week's top wick off the body, right, on both pairs, coming down to the daily. And then after we did that, or, you know, while we were doing that, we had pretty much accumulation for the past whole week, as everybody should have seen with price action. And then coming in on the 4 hour, I saw that we were fairly bearish. I mean, you know, apart from the choppiness, you can like kind of still see, you know, that little bearish range right there. So that was kind of first bearish confluence. All these were pretty much bearish confluence. I didn't really have any one bullish confluence at the start until it was this. So where is it? This, I'm pretty sure. We had a bullish was it this one? Over here, it's this one. We had a bullish SMT, right? Now, SMTs are a really strong thing, and I do not recommend usually trading against them, but that was the only negative thing against like 1, 2, 3, you know, with the overall bearish range. And I mean, everything is just going bad with the economy and politics, so you know, you can use that as confluence as well. I was watching Bloomberg on Market Open. I don't know, they were talking, I'm pretty sure they were talking about something bad as well, you know. So you can just keep adding that on confluence. And then coming in on the 1 hour, I took the short of this FEG over here. We'll just get this out of the way. Really distracting. Okay, right? So took the short of this 1 hour on NQ. As you can see now, it is inversed, but back then it wasn't. So if you come in on the 30-minute, we can see that the reason for the big move up was because of this 30-minute FEG. So you can kind of see a lot of people get confused when there's like two fair value gaps to the opposite side. I haven't really seen another like trader kind of explain it, but I kind of like just call it like a it's not support and resistance, because I don't trade. I mean, it might be. I mean, I don't trade support and resistance, but it could be like some sort of thing of them. It's like a range between the two fair value gaps. Usually, you would see like a decent amount of touch points before I break out in either ones, and you can usually take any breakout between those two fair value gaps to the other one. if you know you're happy with whatever risk reward. But yeah, so coming in now, we can see that this was that 1 hour at the time, and then this was that 30-minute, right? Okay. So all this was taken on pretty much just 1 minute confluences. So we can see on ES, we were pretty meh, like price action wise. And that's why I took it on NQ, because NQ's price action was really, I mean, same as ES to be honest, but there was more movement on this breakout rather than this one. It's not even a breakout. Wow, I don't even know I'm calling it a breakout. But you can, this is what I was talking about, right? I mean, look, you know, it creates that range that on that 30-minute makes it, comes down, right? Doesn't quite get back up, but comes down again. Gets back up to it again, comes back down, and then comes back, right? That's what I'm saying, you know, like, if you can find it, I mean, and ES did the exact same thing. Not this, but like, you know, you learn to spot them. I usually, when it's like this, that's when I use my scalp model. As you can probably see, like, all in the other scalp model trades that I took, it was probably something to do with a range of some sort. But pretty much, confluences were, if you come into the 15-minute, we had equilibrium, and we also had this I forgot what it's called again. I'm actually just brain dead right now. Pretty sure it's called standard deviation or something like that. I could be lying though. Yeah, I forgot. Doesn't really matter though at this point. But yeah, let me get that out of here. So pretty much all my confluences for the entry was mostly taken on NQ because, like I said, ES, I didn't really care about ES because it wasn't any, you know, strong FEGs like there was on NQ. Like, I mean, this is big one. There wasn't really one. There wasn't one at all on ES, so there wasn't really a need to look on ES. As long as ES was following through, that's all I really cared about. And then we saw that we made a Ferrelli gap, right? We made this FEG, we tapped back into it, past that, the 50% mark off that FEG, so it's an even stronger FEG, right? And then, as all that, we inverse, so we inverse as well then, and then I'm pretty sure I entered right around about that inverse, so over here, and the stop loss was at this high, and then I targeted, like I said, just the range, right? Pretty sure stop loss was here, definitely. I entered somewhere around here, and then TP was the top of that 30-minute FEG. So yet again, you know, just range bouncing. Yes, I could have caught this. You know, yes, I could have targeted the 50% level, this liquidity, but you know, that's not part of my scalping model. Scalping model is range to range, you know, top of the range to the bottom of the range, bottom of the range to the top of the range. So pretty basic setup, played out beautifully. I mean, I entered on this candle, and then just 1 minute follow through, and then TP was hit. I was in drawdown with this candle, I think for like 20 seconds maybe, but only up until here. So yeah, really good trade, 1.55 risk reward, not bad at all. But yeah, I'm just gonna explain that range thing real quick. I feel like I explained it decent enough, but we're just gonna do it anyway. Pretty much, you know, if we accumulate, it's gonna start making that range between those two FEGs. And then as soon as you get like some sort of manipulation leg, and it sweeps it out, and then you get a disrespect of whatever trend that manipulation just was. It could be, you know, it could be a FEG, right? So then you inverse that, enter on the inverse, stop. You never want the stop loss to be above the range, because at that point your risk reward is just completely chopped. And if, I mean, if your thing gets hit at the top of the range, you're just wrong. Like, your bias was just really wrong, right? So always just keep it at that high 50% level of the FEG, at the top of the IFEG. Or if you make a FEG and then an IFEG, you can put it above the FEG, right? And then target. So let's say you put it at the high, and then you wait for, let's say there was a fair value gap over here, and then you wait for a disrespect or whatever, and then you can target, and then you can target the bottom of the top of the bottom range. So pretty simple scalp model. I haven't really seen anyone to do this. Probably is someone, you know, just because you trade doesn't mean you're special. But yeah, this was the only trade I took this week, so ended up green this week. I'm pretty much green overall. I haven't taken a loss in, honestly, since I started posting, yeah. So yeah, pretty good trade, and I hope everybody that did catch this short did it good. Or I mean, you know, even if you caught this long somehow, you know, whatever model you have, maybe it was just like a market structure shift or whatever. Hope that long was well. And for the people that are trading PM session, good luck, because there was a lot of volatility during AM, so I doubt PM session is gonna have any. But yeah, later.